everyone. Welcome to our Wednesday Q&A. Actually, though, we're releasing this on Thursday. So welcome to the Thursday Q&A. I'm Eric Griffin, president of ITM Trading. With me, I have Lynette Zang, our chief market analyst. For those of you who don't know or are tuning in for the first time, we take your questions that you submit to us via email to questions@itmtrading.com. We put them on the screen here in front of us. We ask them live so you get a real, true, spontaneous, organic response. All right, so Carol K asks, why are deposits made to a bank considered a liability?
Because in reality, as soon as you make that deposit, you have loaned the bank that money. And so for the bank, it is considered a liability. And then, of course, they can do anything they want with those deposits, sweep them into sub-accounts in their name and use them as equity to borrow and then do whatever they want. But simply put, you make a deposit into their account and you've loaned them money.
Right, and thus that also enables the fractional reserve system, right? To where
Absolutely.
they can then lend 10 times of whatever you put in there.
Exactly.
All right, so Chris E asks, would you please explain how central banks are financing their massive gold purchases out of current liquidity holdings, or do they use other financial methods?
Well, they can do it in many different ways because, after all, central banks create new money. So that's the easiest way to do it. But what we know and what's really significant is that the lion's share, I mean by a ridiculous mile, is in the physical gold. Then they'll use the ETFs and derivatives to manage the price, the visible price that we see. The other big trend that's coming in that I think is important to pay attention to is the fact that central banks are repatriating their gold. So where they used to hold them offshore at the Bank of England or a bullion house or something like that, there is a huge move to bring them back onshore. So financing their massive gold purchases, they can issue debt and create new money. I mean, that's not a big deal, to be honest with you.
I've always wondered, since they can do that, you would think almost, and maybe it just becomes too obvious then, but like, since they have the ability to print money at will, right? You would think, buy it all.
Well, isn't that pretty much what they're doing?
Well, I mean, not necessarily, because obviously there's still plenty of bullion that's coming to, new 2024 products that's coming to market. And maybe it is. Maybe it's 90%. I don't know for sure, like how much they're grabbing. But
you're never going to really, know that.
So that's a good point. Maybe it's a much higher percentage than what we even think.
Right, but doesn't that also go to when people ask us, well, why are you selling your gold? Well, we're not selling our gold. We're selling the wholesaler's gold. We're keeping our gold. But it's the same thing for central banks. They've got to have it as part of their portfolio, and particularly with the extreme level of global geopolitical risk, and which is why they're repatriating the gold, because they certainly saw the sanctions that we've put on other countries. So, it's easy enough for them to finance it. Why don't they buy all of it? Well, I don't know. I can't really answer that.
Yeah.
And depending upon how they're set up, if you think about China, that allowed their citizens to buy gold again, and most of that gold is held inside of their banking system, even though it's physical. So should they decide to do an overt confiscation, well, gosh, they got their citizens to purchase it, work for it, and purchase it, and then they just take it away from them. So there's all different ways, but yeah, that could certainly be how they're financing it. I mean, that's just not that big a deal.
All right, Valami asks, when the system collapses, the currency becomes worthless, people don't trust the currency, and the government revalues the currency against gold, then how does the population know that there really is gold backing the new currency, not just state lies?
Well, when they do that revaluation does not mean that they're backing the new currency with gold, because typically that's just about getting confidence again. Okay, they lop off however many zeros, and a loaf of bread went from, $8,000 to $8. So it makes it psychologically appear that it's cheaper, but they don't change what they're doing. And so that starts to deteriorate very quickly. The only way, and I'm going to be so clear on this, the only way that you will know when there is actually a good currency in the system is when and if you can convert that into gold. If you can't convert it, there is no way on God's green earth for you to know what's really backing it.
When you say convert it, because right now we can all convert our dollars into gold, right?
Correct, by buying gold on the private market.
Right.
Yep.
Well,
yep.
buy it right from us, right?
Well, we're the
we
private
change
market.
it out, right?
Right.
So, when you say that, do you mean you can walk into any bank and the government is saying this is exchangeable for gold, and they are saying, here, give us your dollars and we will give you the equivalent in gold?
Exactly. And Zimbabwe is running that test right now, right? And so, and what was really interesting when I was digging into it, it was really the CBDC that is backed by gold. It was really clear as mud because you cannot convert it, right? So there's been this huge rush of obviously the 1%ers or the top 10%ers, those in Zimbabwe that still have wealth, to convert and buy the physical gold coins. But it's a whole lot less clear on how that gold-backed CBDC is doing, because you can't convert it into the gold and pull the gold out of the system. That's the only way. I mean, when we were on a gold standard and the public could do that, you didn't like the politics, you went in and you created those restrictions. Do governments want to have those restrictions? Do they want the public in control of their wealth? So when that is actually going to happen, it'll be because they're forced to happen. It's forced to happen. It means that truly all confidence in the currency, but also in the regime. And there's something else that I've noticed that I think is really, really interesting. And that's, of course, we had the rise of populism before we had what happened in March, the COVID-19. We had a rise in populism, and that was squashed, right? Well, we've got that surge again, but now what we're seeing is, Biden's form of populism or Trump's form of populism. That's what I'm seeing in the headlines. Are they really populists? I don't know. Maybe. I don't get political because their job is to legalize the theft of the central bankers. But it seems to me like those in power are trying to play to that tune, because what they're seeing is that the public is not buying that the inflation is under control, and not buying how great things are. The public is not buying it. And that's a threat to their authority. So yeah, it'll be lies unless it's convertible. It'll be lies. And that's, that kind of already also takes us back to why. You hold it, you own it, it runs no counterparty risk. If you can't convert and hold real money, it's counterparty risk, it's credit, it's something else.
Yeah. Okay, Kelsey O asks, how do you determine how much silver and gold to own?
That starts with your goals. So that's where everything, frankly, should start, because there's different kinds of silver and there's different kinds of gold, and it depends on what you're trying to accomplish. So I'll give you an example in barterability, because part of the strategy is about sustaining your current standard of living, right? And so, and it's a combination of a variety of sizes of silver, though any talent you have in anything physical that you have is also barterable. This is just, silver is universally barterable. So you would take what your current cost of living is, and then there is a formula that's built into the spreadsheet, which I don't have right off the top of my head, that would actually tell you, well, this is how much silver you need to sustain your current standard of living for a year. And also barterable gold goes in that for like property taxes and things like that. There's also a component that goes in there if, God forbid, but if you're if you have a chronic illness that you need to fund. So anything like that you're gonna have to fund, there are different kinds of gold and silver. And based upon what that current cost is, and based upon the most conservative approach to the gold and silver's fundamental value, what'll happen to it, that's actually what determines how much gold and silver you need. Then there are other kinds of gold if you're going to convert it into income producing assets, other kinds of gold for legacy creation. So it's got to start with your goals.
It's nuanced.
It's nuanced, but and your goals go first, and then what you do support your goals. A lot of times people will just randomly buy whatever, and then what are you going to do? Put your goals around that? No. You start with your goals. This is what I'm trying to accomplish, and then you look at what you have to work with as well. I mean, you might want a $5 million portfolio, but you might only have 5,000 to work with. So you're not going to be able to do that out of the chute, right? And you'll have to make some determinations. But that's the whole point of the strategy. It's basically the same for everybody, but then there are a bunch of nuances based upon what you're trying to accomplish. For me, legacy planning is very important. But I've spoken to enough people that, that it's not important to at all.
Right. So, and it also, it totally depends on how long. There's caveats in there for how long you think that we might need to survive through a reset, right? So, number of years that you want to plan for. So it really is like your goals, objectives. What are you concerned about? What are your fears? How long do you think it's going to last? So it's nuanced in the sense that you can play with those kind of things to ultimately create a outcome that tells you how much gold and silver you should have based upon your goals, objectives, concerns.
And the different areas.
Yeah. It's actually quite comprehensive. All right, Mr. asks, do you think we will see ZIRP again soon, zero interest rate policy? And then the massive inflation starts up again, question mark?
Yeah, I think we're going to see a huge spike in interest rates, and then, I think we are going to see ZIRP again.
Okay, so you think rates are going to go up more?
Yes.
This year?
This is an interesting year because it's an election year, right? So that kind of puts a little bit more nuance in there than if it wasn't an election year.
True.
But do I think that could happen? Yes, I do. And that's mostly because of this massive wall of debt that's coming due that has to roll over, right? And or is going to default. And we're seeing more and more defaults. So we could certainly see a spike in interest rate. Plus what's happening in the repo markets and the reverse repo markets, and the fact that at the rate that they're going, by spring, it may force the Fed to do a pivot. So, and remember, there's only one way to fight inflation, and that's with deflation. And there's only one way to fight deflation, and that's with inflation. So by dropping those interest rates over the last 40, 50 years, right, and going to globalization so corporations can go out where they can buy the cheapest labor and all that kind of thing, well, that's very deflationary. And so what we've been experiencing over that period of time is, that the Federal Reserve and the central banks could actually get away with adding more inflation because of the price pressures coming in from, say, China and other countries, right? But now it's really interesting because we've got the de-globalization of the supply chain happening. That's inflationary, right? Because now we have to bring that manufacturing home. And we already shipped it all off seas, so we've got to rebuild that infrastructure again. And of course, salaries in the U.S. are higher than they are in China. It's a higher standard of living. So we've got that inflation that we're fighting. But a stock market implosion is deflationary. So, I mean, I think this is going to be an interesting year. I think they're going to try and keep it as calm as possible, but I couldn't sit here right now and tell you that they're going to be able to do that, because I don't know how they're going to not just deal with that wall of debt, but all the derivatives built on top of that wall that are, Humpty Dumptys, all those Humpty Dumptys, and how long, even though we know they have to be imploding right now, how long they can keep that hidden.
Yeah.
They're going to get to a point
It
where
would seem
they
like
can't.
that would be the reason to cut rates, to try to avoid those
Exactly.
type of things. But I think the Fed's going to have some inflationary headwinds coming this year.
Voila.
And so therefore it's going to be hard for them to cut rates when inflation's going to start picking up, and then
all those
it's
defaults
gonna
are
be
going to
interesting.
force those rates higher still.
Mm-hmm.
So this is,
It's anybody's guess on if rates will go lower or higher. There's speculation on both sides of it, but
Yep. But anyway, make sure that you watch the video that I did on KS Brewing, because Janet Yellen says, yeah, everything's going just fine, soft landing ahead. Oh, I do not think so at all. And it appears that some on Wall Street are actually starting to agree with me. Shocking. But Daniela Camboni did a phenomenal interview with David Webb. So they're exploring the great taking, which I know a lot of people are very interested in. In fact, that's coming out. That just came out on Wednesday. That's why you're seeing this on Thursday, because we didn't want to keep your eyes off of what's really important. And this is stuff that we've been talking about forever. And then
yes. 100%. It's stuff we've been talking about for a long time. You've been talking about for a long time. That I say, David just did an even deeper dive into it with different laws, and exposes more of the bail-ins, the CBDCs, the seed and company, DTCC, the bank sweeping funds into sub-accounts, like all of the things that we've been talking about on this channel for so long.
Exactly. And Taylor did a phenomenal summary of it if you just have a short period of time. But I'm going to encourage you to watch all of those videos,
yeah,
really.
For sure.
Watch them all. And, make sure that if you have not yet set up your gold and silver strategy, click that Calendly link below. Get your strategy in place so you know how much gold and silver you need to sustain your standard of living, grow your wealth base, generate income that you can't outlive. So that's easy enough to do, and get it executed, because even though this is an election year and even though they're going to try and keep things calm, quite honestly, anything could happen. We are in such a precarious position. Make sure, if you haven't already, to subscribe, leave us a comment, give us a thumbs up, and share. In fact, that 5 minute, actually it's 4 minutes and 29 seconds, isn't it? Okay, that 4 minute and 29 second shareable video for your friends and your family is out right now.
And the title is currently "Share this video with everyone you know." Okay.
Okay, but we're going to change that, because that's the 5 minute video that I've been talking about forever, and had some great comments yesterday. So I've got like two more 5 minute videos that I'm working on. They're not done yet, but I'm just going to continue to try and pump out just these little 5 minute videos to help you share with your friends and family that don't see what you see coming. And until next we meet, please be safe out there. Bye-bye.